Hey, my name's James Nicholson and welcome to my YouTube channel. Now in this video, I want to talk about, is property investing get rich quick? Are you going to be making money very, very fast as a property investor? Well, let's talk about that in this video. Before we do, if you haven't done already, subscribe to the channel and hit the bell notification and smash the like button, guys. We're on target to hit 100,000 views for the second month in a row this month, and you can help by smashing the like button and helping us with the YouTube algorithm. So, property investing. Now, property is something that historically has done very, very well for people. And what you'll find is that more people have made money in property than in business that you know, than have traded the stock market, or maybe in cryptocurrency. And that's because it's far more predictable than most of those things. Now, if you want to have an easy life, you can make money just putting it in stocks and shares in something called an index tracker. And over time, I think it's around 10% return on investment that you'd expect to get from that on an annual basis. Some years will be good, some years will be bad, but on an annual basis, you'll get around 10% return on investment, which is great. But property for me has been a way that I've been able to make good money, and it's been quite straightforward. In fact, fairly hands-off as an investor. And that's because there are people that run this business for me. So I have contractors, I have agents, and those people deal with stuff for me. So I'm made aware of what's going on. So one of my flats in Hastings at the moment has a blocked toilet. Lovely. So I was made aware of it, but they booked the plumber. In fact, it was already done before, it was already fixed before I even read the email to let me know what was going on. And that's because I give them permission to do that for me. I say, if any work needs doing under a certain amount of money, just do it, right? Just do it. You don't need to call me and get permission or wait for me to put it in writing. Just get ahead and get it done. So property investing is something that over time can work out very, very well for you. And that's because you're leveraging your money. That's really, really important to understand. So let's just say we were going to buy an asset that was £100,000. Now, there are houses up north that are cheaper than that, or easily at that kind of mark. We bought one in Doncaster last year for £60,000. So £100,000 is realistic. And so to get that property, you need to invest £25,000, which is not an insignificant amount of money. Now, you can save that money yourself. You could go in with a JV investor and get them to loan you the money and give them a return initially. But whatever you do, that's what you need. You need some money down, unless you use a strategy like a lease option. But let's just keep it simple in this scenario, right? So you've got an asset worth £100,000. Now, on average, UK properties double every 7 to 10 years. Now, the next 7 years, that's probably unlikely to happen. But the next 10 years, possible, right? A lot of people think that because we're going into high interest rates, house prices are going to go down, that this will stop. We've had these scenarios before. And so I bought my first property in 1999 for £45,000. That's now worth £250,000, 5 times what I initially paid for it. So let's just say in 10 years, this asset goes up to being valued at £200,000. I'm just going to keep these numbers nice and easy for you so we can really understand how we're leveraged here. Now, in a year, let's just say in a year, if the house price has gone up 10%, which is similar to the stock market, in our first year, we might have made £10,000 extra in equity. Now, if we invested in stocks and shares, you can get something called a margin account, but most people just trade on what they've got. So we would have 25 grand, we would have made 2.5k in profit, 4 times more on the property. Plus, we've made rent in that time, and we would have made a profit on the rent. Of a 100 grand property, you could probably get that for around 700 quid. You could make about 300 quid profit if you bought up north, and then that would make you around 300 quid, 250 to 300 quid a month, which is around £3,000. So you're actually going to make around £13,000 improvement to your net worth over that period of time. Now, that's what year one, right? Now, this is the 10th year here. Now, we have got a property worth £200,000. House prices have gone up as they normally would. And short term, that's not probably going to happen in the UK. Long term, it always comes good again. We've still got a lack of houses and so many people in the country. So let's just say it's worth £200,000. We would have this on an interest-only mortgage. So we would have had a £75,000 mortgage there. And so we now owe the bank £75,000, but we've got £125,000 in equity. Now they will lend us 75% loan to value, 75% loan to value. So we can borrow 150 out of this property, right? They'll lend us 150. We'll pay back the 75 grand that we owed already. And so we now owe the bank £150,000, but we've got 75 of it in our pocket because we paid down this debt and then we've got nothing else to pay. So we keep the spare 75 and then we go shopping for another house. Now this time, houses are now worth £200,000. So we've got our first £200,000 house here. We can now buy another one of those with a 50 grand deposit because we need to put 25% equity in there. Right, so let's just say we put 200k in here. We've now got two properties. We've still got 25 grand in the bank, which we can use. We can take that as tax-free income. Now, we've got two properties, and in 10 years from then, these are going to be worth 400k. And we have debt on both of these. So we'd have 150 grand mortgage on one. We'd owe £300,000, but we've got £500,000 in equity in these properties here. Houses are now worth 400 grand. So we could take out some more debt from these properties. We could borrow 300 grand against each one. And so that would give us 300k mortgages on both. And now we can go shopping again, right? So let's just keep it on this line. So we would have 300k in the bank. We've got to pay the 150 grand mortgage off of that, 150 grand off of that. So that leaves us 150 left in the bank from this, 150 left in the bank from this. Houses are now 400k. So we need 100 grand deposit to buy that. We've got 300k. So we can now, instead of buying two this time, buy 3 more houses. And we would have a 300k mortgage on each one. And so this is a cycle that takes 10 years to go through, but it compounds. So we can get this a little bit faster. So if you want to be making wealth, investing in property is a get rich for sure if you buy in the right area and you buy a good deal and you just hold the property. So we, in my businesses, buy and hold. I've never ever sold a property in my life. I don't plan to sell a property anytime soon. I buy property and I hold property. And over time, my capital appreciation goes up significantly. And that is really what increases my net worth. Now, the rents that come in is what I live off on a monthly basis. So that covers all my monthly outgoings and a bit more for holidays and stuff like that. But where I really get wealthy is the capital appreciation. And so if I just have one buy to let, then that will be slow. But as time goes on and I reinvest the equity into other properties, I don't over leverage. I make sure that I time the market. So right now there's a little uncertainty. I will be still buying now, but I'll be really looking for good deals, of which there are tons available now. I won't buy new builds that go down in value, but I'll gently add to my portfolio. I won't extend too quickly. And what I can also do is reduce the time that this happens, right? So this might take 10 years for it to double in value. How could I reduce that time? Well, what I could do is add additional bedrooms. That's going to add value. I could add an extension. I could buy £100,000 property that's in really bad condition and needs a refurb. That refurb could then add 50 grand. It might not get it to 100 straight away, but it might get it to 150. So if I get it to 150, then in the 10 years, it will be worth 300 grand. So that's really, really important to look at. What can you do to add value to property? Property, if you buy and hold, is get rich for sure, but it's not quick. As you can see here, it could take 10 years for the property to double in value. In that time, you might only make 250 quid per property per month. You're not getting rich doing that. Now, you can do other strategies like HMOs, where you can turn that property into a house of multiple occupancy and earn more income per property. But you've got to look at it as a fact that it is a get rich slow process. But this is probably the easiest type of business that you can have. And it's very hands-off. If you get an agent and contractors to run it for you, you just sit there and over time, the money will flow in. Don't over leverage yourself. Don't go too quickly. Make sure you know what you're doing, and all of this stuff will come together. Now, we have a program that we sell called the Fundamentals of Property Investing. We're actually doing a flash sale on it this week. It's just £19 today. So what I'm going to do is put a link in the description so you can grab a copy of the Fundamentals of Property Investing for just £19. So go and have a look at that. It's a no-brainer. It'll go into way more detail than this. There are 90 lessons in there on how to actually set up a property company and make money investing in property. That's it from me. Do check out all my other content. Why not go and watch this video right here?